Hey everybody, it's Pete. Good morning. How are you today? I just wanted to touch on something and show you a brief 4-minute clip from something that we did last week that is a monster part of trading, monster part of understanding when you should have conviction in your ideas and when you should scale back, either lower your position size or maybe even just be in cash. I'm going to show you something that we talk about literally every single morning. It's one of the first things that we start out with in our game planning videos, and it is this. It's when we take a look at the sector rotation. It's when we talk about which sectors and then dive deep into which individual stocks make up those sectors and which ones we should be looking at to be following the smart money. It's only a 4-minute clip, but it's so critically important because the futures are actually getting crushed this morning. And I know we talked about this last week, which was leading up to this. I want to use this more as a lesson so that you can do better game planning or elevate your game planning, where you put this kind of stuff into context, where last week we said the SPY ETF and the market was feeling heavy because underneath it was not being supported by the right amount of stocks holding the indices up. So the way we described it was that the car was still going forward, but it was stepped off the gas. And yesterday and today specifically, we're seeing it in a big way where the market's coming down. They're saying it's inflation. They're talking about the pandemic resurfacing again, but it just, the higher prices in the market just weren't supported. So I would like to ask you to watch this 4-minute clip from a video that we did last week, where we actually said the market's kind of hanging by a thread, but use it as a process so that you can improve your trading decisions and know when you got the green light from the market and order flow, or when you should kind of be in cash. We've been talking about for about a week and a half now, reducing position size. So even if you had positions on and you had losing trades, they were not as big or a smaller number than you might normally risk. And that's just smarter trading. So we've been talking about it in our private community. I've been mentioning it every single morning, and hopefully you put the pieces together with us. So enjoy this 4-minute clip, and I'll speak to you soon. If you have questions about this, definitely leave a comment below. I'd love to hear from you, especially about putting this kind of stuff together, because this is really what separates somebody who's just reading charts and looking for patterns to want to elevate their game and be a trader. So I'll speak to you soon. Have a great day. So the first thing we're going to do is we're going to jump on over into the charts and taking a look at the SPY ETF. Again, hit new all-time highs, keeps churning higher. But today it reversed. And if you really drill down and take a look at the hourly chart, a bunch of what we call melted candles, a lot of indecision. Now, lately we've been saying great bullish gap, everything looks awesome. But this time is a little bit different. This time they couldn't do what we call hold the bid. It wasn't able to stay up there. And I just want to address that for 1 second, because we get a lot of good questions about trading terminology and good feedback. I welcome the feedback that sometimes I might, I'm from New York. Maybe I talk a little bit too fast. If I do, I apologize, but that's a part of being passionate, right? So when we talk about they didn't hold the bid, if you can imagine that you have a hedge fund, and let's say that you have 1 million shares to buy, just using as an example, and you start buying, the stock starts to go up, and you're the reason it's going up. Now, normally what happens is the stock will go up and pull back a little bit, go up and pull back a little bit. Best case scenario, it goes up and goes sideways. So if it goes up and goes sideways, that means that they're holding the bid. It's not going down because there's new fresh buying underneath there holding that bid up. So they're holding the bid by absorbing any selling, and it's going sideways. So what we would have liked to have seen in the SPY ETF today would have gone up on the bullish gap, which I believe is the 4th consecutive bullish gap on the chart. And we would have liked to have seen it held the bid, go sideways, and maybe even drift a little bit up, but it actually started to slide to the downside. That's the first sign of the big picture weakness that I'm seeing in the market right now. And again, we're up 7 days in a row. It's not a big deal if we get a little bit of profit taking. Oh, by the way, we're also going to show you the Home Depot swing trade that we called out 2 Sundays ago. It hit our initial profit target today. I want to walk you through the trade management on that. So getting back to the market and getting back into what the SPY is doing, not quite a perfect bearish reversal, but now if we dig a little bit deeper, and again, can't stress this enough, this is where you start to separate yourself from chart reading and start to become a trader. We now look a little bit deeper into what's supporting those all-time highs in the market, and it's really only one thing: technology. Technology stocks have been leading for the last 3 or 4 weeks. Hopefully you're watching the videos every day. If you're not watching the videos every day, if you could please click down and subscribe, hit the alert button so that you get these kind of updates every single day. And also let me know that I'm providing the kind of content that you want to see. But more importantly, think of the market as all of these individual legs that are holding it up. And you hear me talk about it all the time, the stock market power pyramid. You have the general market, NASDAQ, S&P 500, and the Dow. And then above that are the sectors. Above that is the industry groups within the sectors. And then you just have individual stocks. The more of that foundation you have underneath your stock trading idea, the more conviction you have, maybe trade a little bit more share size, maybe hold it a little bit longer. The market's obvious right now, but we're a little bit beyond that optimal entry to the point now where even if it goes up, you still wouldn't be adding to a position up in that area, especially if it's a swing trade, right? So how does that translate into what we're watching now? If we talk about that power pyramid right now and look all the way to the right over here, and you see what was strong for the day, not much. So we finally cracked a little bit where we stopped going up, maybe broke even a little bit after the bullish gap, but nothing's supporting it. So the thing that we were talking about today in our private community, and if you want to find out about our community, please click down below and just find out about the next 30 days. What we were talking about today was that technology is holding the whole market up right now. Financials really aren't that strong, especially banks. The stress test is out of the way. Basic materials continue to get hit. Industrials continue to get hit. Energy stocks continue to get hit. So what's holding the market up right now? It's kind of like it's like hanging by a thread right now, despite the fact that we're all-time highs.